All right, all right, all right. Welcome, everybody. We will give a few minutes just before we get started, allow people to trickle in there. You might see I have a little bit of a new camera computer setup. I'm hoping that everything goes seamlessly with that. And let me go ahead and make sure that we are in speaker view at the moment. Then we'll switch to gallery. Welcome, everybody. Welcome back to another Rake Trades webinar, in the first webinar that we are filming with our new little setup. Now, we do have a few more tweaks in order to make this even better, but this is what we're starting with. So let me go ahead and make sure to get the right screen shared here, and let's go ahead and talk about today's agenda, what the plan is for today, what we are going to cover. Today was honestly a relatively impromptu webinar. I won't lie to you. We just had the RakeTrades LA meet and greet on Friday, so just a few short days ago. That was one of the most insane experiences of my life. That was open to the public. Anyone who was able to get a ticket, which were free, able to come and get a drink on our tab. We were able to shake hands. 100, 150, 200 traders ended up showing up. Everyone able to have an awesome time. It was truly a very, very special experience. Now, I know, though, that as soon as we did that, we had a lot of people. Let me make sure everyone is muted. Now, while I know that we had quite a few people in attendance, I also know that not everybody who wanted to be there was able to make it. So I had this sense that there was a whole lot of FOMO going on for a variety of different reasons, right? I think that people have had FOMO from last week's trading week. It was the most insane trading week of my life. It's not close. As well as I think people had a whole lot of FOMO from not being able to make it to our first ever public meet and greet open to the world. So in lieu of that, what I decided to do was host a brief webinar today. Normally what we do on our Sunday webinars with the team is we just go through some psychology. We go through a couple of charts. They're 10 to 15 minutes. Then we get ready to execute on Monday morning. Now, obviously we had a holiday this week, right? Obviously, this is not our normal schedule, but this is something that we wanted to make sure that, okay, let's do a little bit of review for everybody who was not able to be there. Let's do a little bit of our normal Sunday webinar prep and review for the week, even though it's Monday, as well as let's do a little bit more of a deep dive on the trading psychology that I have coming into this week after my best week ever, right? So I want to give you a little bit of a glimpse into how I'm going to prepare for this week after what I've gone through, having gone through last week, right? So for somebody who's trying to record this, no problem. It is being recorded on our end. The recording will be sent to every single one of you via email, and I'll likely end up posting this on YouTube as well. So don't worry, recording is all good. So let me go ahead and share screen here. All righty. Perfect. There are several of you trying to record this. I'm not sure why. My date change didn't go through. But I wanted to do a little bit of a review on a psychology webinar that we had done collectively as a group about a month or two ago. I want to say it was almost 2 months ago now. At this point, almost 2 months ago, and let me make sure that everyone is still muted. Apologies about that. This is our first time with this new setup, so I just want to make sure that everything is all copacetic, and it appears to be working perfectly. So let me minus that. All right, and subtract that. So if you might remember, a few months ago, I did a very deep webinar on trading psychology called The Loop, right? In my opinion, it was not only one of the best webinars that I have ever given, I believe it is one of the best trading psychology strategies or videos out there. I honestly put that video up there with like a trading in the zone, a mental game of trading. Like it contributes that much to someone's trading psychology strategy as a high-level trading psychology book would do, right? Now, I did a very thorough webinar up on that. That's been on YouTube for a while. My assumption is that if you're here at this webinar, that you also either attended that one or have watched that video. One of the things that you will always know about me, right, from all of the previous webinars that I have done is that I don't like to repeat stuff, right? I don't like to give you all the same loop psychology webinar that I just presented on a month ago, right? I'd rather keep adding more tools to the tool belt, so to speak. So for this particular webinar, what we're going to do is a brief run through on some slides, because I think there's the way I'm going to describe it is like a cousin of the loop. I think the loop has a cousin called the spiral that we need to have a conversation about. After having a conversation about that, we're going to dive into the charts a little bit, and I'm going to break down what I am watching from a individual perspective, overall look at the SPY, right? So what I think the SPY can do this particular week, right? So first, we're going to start by reviewing the loop. Then we're going to talk about the spiral, which is the loop's deadlier cousin. And then we are going to dive into the chart. So with that being said, strap up, everybody. I believe we should be all good to go. If there are any issues from anybody that is on my team, Ron and Callan are not on the Zoom trying to preserve our internet. But if you notice any issues along the way, please just text them. They can come tell me, and we will be able to solve anything that pops up, right? Now, that being said, let's dive in. So the first thing I wanted to do was a very brief review of the loop. As I mentioned, my expectation is that any of you who have watched my videos before, who are attending this webinar, you've watched some of my webinars or previous YouTube videos before. If not, welcome. I hope to deliver to you an awesome show. But the loop is one of the most powerful things that I ever talked about, right? It is this psychological term that I have created for a cycle or a series of events that happens to almost every trader or every trader at some point during their trading career. And for me, it's important that we talk about and identify what those stages of the loop are. And then at the end, we're going to circle back to the best ways that you could have avoided the loop, right? Now, again, we're just going to run through this briefly because I have a very in-depth presentation on it already posted on YouTube. And I don't want to repeat information with you all, right? I'd rather talk about new stuff and get you all some fresh perspective as opposed to repeating myself on stuff that you've already heard from me, right? So stage one of the loop starts out very simple. You enter a trade, and for whatever reason, maybe because you're watching the P&L, maybe because you're really fixated after a big losing streak, whatever the case may be, as you are up a certain dollar amount on that trade, you end up closing the position and you watch it run a whole lot of profit without you, right? That stage one of the loop leads us into stage two. During stage two, excuse me, I should say stage two is I got a little ahead of myself. Stage two is when you watch that trade run extremely hard for profit without you, right? Basically, you sell early and then you watch something make that massive move without you. That's the key elements of stages 1 and 2. You start off by selling early and watch that trade make a move that you hope to catch. You were planning to catch it. It makes that move without you, right? Mentally, this takes a toll on your psychology and ultimately leads you to rush into the next trade. Now, in stage 3, you enter the next trade. The trade goes against you, right? But based on how much profit you felt like you deserved from the previous trade because it ran without you, you sold early. Because of that, you end up ignoring your stop loss. You hold that position for far too long, and it ends up taking on you take a way bigger loss than you initially anticipated, right? So we have stage 1 of entering a trade and selling early, stage 2 of selling that position early and watching it run without you, in stage 3 of essentially entering a new trade and ignoring your stop loss because you had a recency bias towards stages 1 and 2, right? Now, stage 4 is when you enter that next position, continuing on this cycle. And because of how scarred you are from what happened on the previous trade where you lost way more than you initially planned, the same thing starts to happen again. As the new trade starts to work in your favor, you have no ability to hold that position for a winner, and it ultimately ends up being something where you sell it early and watch it run without you, right? Now, you can start to see a theme here, right? You enter a position, you sell that position early. Because of what happened on a previous trade, you ignore your stop on the next position, then you're scared going into your next trade. It is what we call the deathly cycle, right? For me, this is what I refer to as the deathly cycle. Now, I'm assuming most of you have this understanding and framework of the loop in your head already, but the last part of review that I want to do during this webinar is quickly talk about the psychological flaws and the fundamental flaws that are associated with each stage. Right? So that first trade, when you enter the trade and it ends up, you exit it because you're watching the P&L or because you don't want to give back any of that profit or whatever the case may be, there's this fundamental flaw within that trading thought process where it's based on greed and dollar-based value decisions. You're making some sort of decision based on the dollar value of that trade or based on some feeling of greed that you have, right? That is forcing you to ultimately sell that position early. Now, in stage 2, when you run that trade runs without you, right? This is where you start to develop that recency bias. You start to develop this idea in your head and this sense of entitlement that you were owed that profit, and that because that happened in the last trade, your recency bias is going to push you into believing that it is going to happen again in the next trade, right? This also starts to establish what we call Pokemon theory. Pokemon theory is essentially this idea of trying to capture it all. You want to capture everything. You want to not miss a beat. You feel like you deserve to catch every single trade that is out there and catch the exact top and bottom of every single trade that is out there. Whether or not you actually think that, during stage 2, your subconscious is starting to develop this Pokemon theory within its brain, right? Now, stage 3, when you enter that new trade and ultimately ignore your stop loss because of the recency bias you had on your last trade, there are some obvious fundamental flaws. The first of which is overconfidence. We're going to talk about overconfidence a lot more in the coming slides, so make sure you stay tuned on that as well. Then the dollar value focus starts to resurface, right? All of a sudden, rather than basing your trades off the chart, which I'm not reinventing the wheel here, my friends, every good trading mentor that you've listened to before has probably told you to listen to the chart as opposed to the dollar value behind your trade. If not, I would definitely advise looking for a new mentor, because you should always be basing your theses off of the chart. Stage 3 in this loop, where you ignore your stop loss, that's recency bias starts to come into play, usually comes because you're focused on the dollar value, you're focused on trying to capture every single trade, and it's this sense of overconfidence and really ego of ignoring being wrong that starts to ultimately negative impact the decision making you have on whether or not you should hold that trade, right? Now, usually, like we mentioned, that leads you into having too big of a position where you take too big of a loss, and that loss starts to weigh on you into the next trade. And this is where we start to see all of those fundamental psychology flaws come together, right? Like a beautiful, terrible, deathly freak of nature that is just there to absolutely destroy your trading account, right? Making P&L based decisions on the trades that you are in, having a sense of greed, having a sense of overconfidence or ego, ignoring the fact that you are wrong, having this sense of loss aversion where you just can't accept that what you put out there into the trading world was incorrect, having the sense of recency bias where you feel like what happened on your previous trade will carry into your next one, and of course, Pokemon theory. When you talk about the loop as a whole, the loop encompasses all of those fundamental flaws that traders will have when trying to figure out the right trading psychology, right? So all of this was reviewed. All of this was what we talked about in our previous webinar. If you're somebody that's like, Jake, I was expecting this webinar that you're doing right now to be a long 1-hour presentation that's very thick, what I encourage you to do is go back and watch this loop one if you have not yet, because that is a very thick webinar where we dive deep into everything that I just mentioned to you, right? But what I decided to do for this one, as I mentioned, I absolutely hate when people are like, come do my webinar, and then it's the same shit that they, pardon my French, but it's the same thing that you've been told over and over and over again. It's the same YouTube videos that they've been putting out for a while, or it's even word for word the same exact slides that were done previously. What I always like to do is introduce something new to you all. And quite frankly, the subject material that I'm about to talk to you about came to me yesterday, right? Now, I've been aware of everything I'm about to talk about much before yesterday. But as of yesterday, I started to get this little bit of a thought process in my head that's like, okay, you know what? The loop is really bad, right? Like the loop sucks. When you are stuck in the loop, it is one of the most deadly cycles in all of trading, right? That much we know. Nobody disagrees with me on that. It is hands down one of the most dangerous cycles that you can be in, right? But I started to think, is that the only cycle that I feel like I was ever stuck in or am currently stuck in or anything like that? Was there another thing that was almost similar to the loop, but with just different elements of it, that I would get caught in this so-called cycle of just, it starts good and then it ends bad, or it has good elements, has bad elements, but it always ends poorly. And that for me is when I decided to come up with what I called the spiral, right? The spiral. Now, I did think of a few different names for this. I started out with like the overconfidence sequence, the cockiness peril, or I don't know. I tried a few different names, but I really liked the way the loop is simple. It's short, it's sweet, it's simple. When I talk about the loop, you know exactly what I'm talking about. The spiral is very similar, right? It's very similar in the sense that much like the loop, it's going to have a series of stages where you find yourself caught, right? And then eventually leads you to the next stage, until it leads you to that blow up stage, right? Now, the first stage of the loop, like we talked about, right, is you selling a position early. And in that stage, in stage one of the loop, usually that leads you to make poor decision-making on your next trades because, right, you're coming off of a trade where you sold for 20% and next thing you know, the position is up 200%. And all you had to do was follow your trading plan, right? That's stage one of the loop. The spiral is a little bit different to me because the spiral I want to talk about, and it's good place and time and place for this, it comes typically after bigger winning streaks, right? And I want to make sure to cover this because most of you as traders have gone through some sort of winning streak in your life. I know that for some of you out there, it may feel like, Jake, winning streak? What's that? I don't know what it's like to win for more than 3 seconds in the market, blah, 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 blah. I completely understand. Don't get me wrong. But you don't have to necessarily have a month or two or a year-long winning streak to be in a streak. A streak, by definition, is back-to-back consecutive things. So if you have had ever in your life 2 consecutive winning trades, which I imagine 98% of you have, that at some point puts you on a streak. It's a run, right? At that point in time, you have then had consecutive winning days in a row, and that shifts your mindset, right? So stage one of the spiral is actually not that bad. Right? Stage one of the spiral is actually pretty good. It's you have a series of winning trades, days, or weeks. Now, this could be 2 winning trades over the course of a 1-day period, right? You won in the morning, then you won in the afternoon. That's the longest winning streak you have ever put together. I don't care. That's a winning streak. You won at first, then you sequentially won again. By definition, that's a winning streak, at least how I'm defining streak. Nobody Merriam-Webster's dictionary this on me, but that's how I'm defining streak. Now, sometimes that could be 2 trades over the course of 2 days. That could be three months worth of 10 trades per day if you're a scalper, whatever it is. Does not matter. This doesn't matter what kind of strategy you use. This doesn't matter what kind of thought process you have on the charts, right? Stage one of the spiral is essentially this series of winning trades, right? Where you have 1 winning trade that goes well, a 2nd winning trade that goes well, right? A 3rd winning trade that goes well, whatever it might be, whether it lasts for 10 minutes and then you lose all the trades after that, whether it lasts for a 1 day, whether it lasts for a month, whether it lasts for a year, it always starts with a winning streak, right? And this is where I think it's sort of important to make sure that we talk about the emotions and the feelings that sort of come along with it, right? I don't know about you all, but when I ever go on a winning streak, and again, how you define streak is up to you, but whenever I go on a winning streak, there really is this like, I do my best to try and negate it now because I've been through it. Like I've been doing this for 6 years, right? So I've been there, done that. I've had hot streaks, I've had cold streaks. This is all part of the game for me. But even to this day, when I go through a winning streak, there is this sense of euphoria that comes along with it that is really hard to manage, right? Like it is truly extremely difficult to manage once you're in some sort of state of euphoria, right? Because it's hard to then like get back to earth and bring yourself back down and be like, look, I am not invincible. I am not a hero. I'm not someone who can't lose. It's really hard mentally to do that. So I would say that with stage one, the emotion that I think you should start to attach to this, attached emotion, is euphoria. Right? It's that feeling of euphoria. And again, my friends, this is the first time I've ever presented on this material or subject. So we're working through this as we go together, right? So I believe that the attached emotion that we should stick with this is euphoria, right? I think that I have to imagine every single one of you has felt that on some level or another, whether it's a day, whether it's a week, whether it's a month. Why is it not? Oh, there we go. There you go. Right? Whether it's a day, whether it's a week, whether it's a month, whether it's a year, whether it's 2 seconds before you take your next loss, that feeling of winning back-to-back consecutive trades gives us this sense of euphoria, right? Now, stage 2 is what I call the series of volatile trades that start to come up, right? I don't know about you all, but I imagine, much like the loop, something that happens to me on a frequent basis likely happens to you all. And it's after I've had a winning streak, there comes this series of volatile trades, right? And the reason I use the term volatile there is because I don't want to say that they're good trades or bad trades or whatever. They're just volatile. And I don't necessarily mean volatile in the sense of how much of a percentage up or down they go. I mean like emotionally volatile, right? It's this feeling of like when you're, let's say after stage 1, you have a few winners in your book, right? And in stage 2, usually what comes along with it is higher dollar risk than normal. You add on, maybe you haven't withdrawn profits yet. Maybe your account is up 10%. and you just put on a little bit more risk than normal, right? This is that series of volatile trades starting to come into play where all of a sudden on a normal trade, you risk $1,000. And next thing you know, you're in a position where you have a $3,000 stop loss. And it's almost like this feeling of like, once you're in, you almost like don't remember. It's like you black out when you enter it. You're like, holy crap, like I'm down 1,500. I was not cool with this. I did not plan this. You lose your sense of emotional stability. This is the way that I personally feel when I start to feel myself entering stage 2, right? And this is really where the term spiral started to come from for me, and it really stuck with me, is I start to spiral a little bit. You have these big P&L swings. Maybe you're down a lot bit more than you are initially comfortable on one trade, but then it recovers, right? You average down maybe, or whatever the case may be, but it recovers. You get out for a profit, maybe even a good profit, but it came with a rule break, right? For me, it really starts to be like this extreme sense of dopamine, right? It really starts to be a bunch of dopamine hits that start to feel like they are hitting my brain on a frequent level on every time I'm entering a trade with a little bit more risk than normal. It's that I am feeling more excitement and more anxiety than I was in stage 1. Stage 1, I was having consistent winners. You would think that that's the most excited you can be. But stage 2, you start to get more excited on the winners, but on the losers, you start to get more gut wrenched. Your heart is racing while you're in these trades, right? But it's all stems from this sense of overconfidence, right? And this sense of euphoria that comes with stage 1. So what I've decided I like to do is now attach an emotion to this. And I'm actually going to do a little bit of a unique one here. I don't know whether instability is the right word or unstable would be the right word. Maybe they're both right. So I'm just going to put both. Nobody ever said I was great with grammar. I didn't claim that to be great with grammar. Don't act like I claimed I was great with grammar. I never did. But for me, this is where you really start to have unstable emotions on all fronts, right? You are starting to feel like, okay, I'm getting a couple of wins. I'm getting these wins, but my losers are scaring me a little bit more than normal. My drawdowns are a little bit bigger than normal. Maybe you had one day where you exceeded your max loss. You took an extra trade and it happened to hit and you made it all the way back and more, right? But it's these very volatile emotional trades where you're putting on a little bit more risk than normal. And the last part of this stage that I think it's really important to cover, right, is this idea of it's just my profit. I have talked about this countless times over the course of my career as a content creator. But one of the most deadly thought processes that you can have as a trader is this idea of it's just my profit, where you start to end up risking more than you would normally under the rationale of you are just risking what you previously made, right? Like, oh, it's just my profit. It's just my, don't worry, mom, it's just my profit. Mom, I swear, it's just my profit, right? Like that's you fear it seriously. Like that's what starts in my head. All of a sudden you'd be telling your significant other, like I was up like $5,000 a day. I was up $500 a day, whatever the number is. And then you have to go and explain to them later, well, I actually closed the day up 100, but don't worry, it was just my profit. And they're like, well, wasn't the 500 your profit too? And you're like, well, but no, they're 100% right, right? That's one of those deadly feelings that can possibly come up. So I'm going to go ahead and attach that as another emotion here that I think is important to pay attention to. Is this idea of it's just my profit, right? This equals most dangerous thought process in all of trading. It truly is, right? Stage 2, in my opinion, is where the spiral really starts to begin. Now, stage 3 is where the spiral goes from, okay, this is something that like is a fear, is a worry. Stage 3 makes it all of a sudden worse, right? All of a sudden worse. It makes it everything that you could have imagined. It's really the beginning, right? It's where, no, that's not true. Stage 2 is the spiral that starts at the beginning. Stage 3 is where you dive in head full on, right? For me, it always starts with one trade. And truth be told, most of the time, it's actually a pretty good trade setup. Here's the truth. When you're on a hot streak and when you have consistent winners in a row, usually that's because you're doing something right? Like most people don't just go on a hot streak out of luck, even though we're going to talk about how sometimes markets do offer more friendly conditions, right? However, you don't just go on a hot streak without doing something right? So the reality is that the trades you are taking in stage 1, 2, and even 3 are likely good trades. There's a reason here, in my opinion, that I start this sentence the way I do. It's one trade that has a high probability and great risk to reward, but it just fails, which we know is part of trading. I don't know what strategies others have taught you in your careers, but the right strategy from the right mentor will always teach you that there is always a possibility that the trade setups that you take fail. That's how markets move. Things go from up to down. So there is no guarantee. There is no 100%. No matter how good something looks, no matter how good the risk to reward is, there is a chance it can fail. I don't care if you have 99 things lining up in your favor. There's a 1% chance it fails. 1% happens, bro. Like, it's the reality of trading. So there's going to be amazing setups that occasionally fail. Usually the way that this turns, and this happens for me, is this leads to a larger than anticipated give back, right? A give back, right? Where let's say you're up $1,000 for the week, right? And on Wednesday, and next thing you know, on Thursday, you give back $400, right? Now, for some of you, you might be like, that's not that big of a deal. But for some of you out there, then for many of you, depending on how you scale these numbers, right? You could end up giving back essentially 40% of your profits for the week on one individual given trade, right? That one trade, all of a sudden, you have wiped out a significant chunk of what you have just spent the previous 3 days making. Right? So all of a sudden, the heightened levels of emotional volatility and instability that you were feeling in stage 3, right, become even more they became even more that's not the word I'm looking, magnified. They become even more magnified within this stage 3, right? All of these levels of anxiety when the trade is failing, or extreme excitement when the trade is working, whatever the case may be, those become even more heightened, right, with these P&L swings, and you end up giving back more than you wanted to, right? Because you've been on a hot streak. You saw a really good setup. It was really good. So in turn, what you do is enter a trade with high probability, high risk reward. It's a great setup. Everything. It just fails. And you put on more risk than you wanted to. But let's give yourself the benefit of the doubt. Let's say that you actually follow your stop loss. Now, you might have planned to risk more than you really were comfortable with, but you follow it. You lose that $400 on the week. Right? All of a sudden, of the 1,000 that you're up, you give back that 400. Now you're going into Friday up only 600 on the week, right? Only 600. I say only. I only say only because it's in reference to the 1,000. 600 is an amazing week, no matter what stage you are at, right? So after losing 40% of recent profits on stage 3, this is where stage 4 starts to come into play, and it is the vicious aspect of the spiral, right? Stage 4 is where the revenge trading starts to come into play, right? After losing 40% of your recent profits on one trade, the only thing that our brains can then think is that, oh my gosh, I lost 40% of what was mine, right? Like, that's the way the brains work. We don't think of it as like, oh, I lost $400, or I lost this, or I lost that. We think we lost something that was ours. We deserved it. We earned it. We worked for it. It was ours. And then I lost it, right? So the way that our brains work instantaneously is that we want to get that back. Again, not reinventing the wheel here with you all with revenge trading as a concept, right? But that's not necessarily the point of this presentation. I'm not here to reinvent the wheel. I'm here to present things to you in a way that will stick with you and resonate with you and prevent you from making those mistakes over and over and over again, right? Revenge trading is something that everybody likely learned of, but it's unlikely that you had learned it in a stage system like this, where you can actually start to identify it in advance, right? So our sense, after losing 40%, I can't change to 30, but let me get it back to 40. After losing 40% of our recent profits, all our brains can think of is, that's mine and I want it back. I want it back now, right? This sense of ego really starts to come into play because we are just coming off. Remember, we're coming off that hot streak. So this might be the first real bigger give back trade where we actually took a significant L, right? So for the first time, all of a sudden, this sense of ego and this sense of entitlement is starting to come into play more and more and more. And the reason I believe it could be more deadly than the loop is because you have this extreme sense of overconfidence and euphoria still lingering from stage 1, right? So all of a sudden, out of nowhere, where you took one loss for 40% of the profits that you had, right? Of that you regained. All of a sudden, it turns into 100% plus loss of your profits very quickly. You have $1,000 on the week, and next thing you know, you end on Friday. You say Monday, Tuesday, Wednesday, you're up 1,000, right? And as a matter of fact, let's create a new slide for this, just because, again, we're going through this together, right? Let's say that Monday, Tuesday, Wednesday, right? You end up with plus $1,000 profit, right? Stage 1 and 2 of the spiral. On Thursday, you got minus $400, right? Stage 3 and stage 4, or stage 3, excuse me. Right? So Friday is the real kicker. Right? So this is the way that I envision this. I apologize for not making this slide in advance. But like I said, this is all kind of a new thing to me that I've had this in my head for forever. And I'm really happy that I'm finally getting it down in an organized way that I think can be really beneficial to everybody. Right? So let's say this is how your trading week went. You started on Monday, Tuesday, Wednesday, and throughout the course of those 3 days, right, you actually have a series of stage 1 and 2. You have consistent profits. You go on a little bit of a winning streak. Even if you start to enter that stage 2 of the spiral where it's a little more volatile on your P&L than you'd like, right? It is something where you are actually able to make money those first 3 days of the week. And I cannot tell you all how many times it's been pretty much these exact numbers for me, right? When I was trading a $2,000 account, this is kind of the frequent $2,000 to $500 account and aggressively trading it. This is very frequently what would happen to me. Monday, Tuesday, Wednesday, I would make money, right? And I would have this, I'd feel this sense of confidence, but I would use up a lot of my mental capital. Thursday is when I would enter that stage 3. I would have that give back moment where all of a sudden I gave back more than I was actually comfortable doing of the profits that I had. Right? And stage 4 for me did typically come on Fridays, where out of nowhere, right, you went from having a week where you were actually decently profitable, right? Then you had one kind of mixed day, right? And on Friday, you're on the last day of this, whatever it might be, you come into the day and this stage 4 just takes over, right? The biggest difference between stage 3 and stage 4, quality of setup, right? So this is where it really, really gets you. And this is where it really, really, really gets me more than anything else. It's the quality of setup. One of the things that we very distinctively and for a very specific purpose pointed out in stage 3 is that the trade that you take actually has a high probability and good risk to reward. Like, it's a good setup. It just fails, right? The trades that you're taking in stage 4 are not good setups historically, for me, at least speaking for myself. Typically speaking, on my stage 4, when I'm in that revenge trading mode, the setups are trash anyways, right? Like, I'm trying to force something where it's a Hail Mary, where if it happens to go right, I'll make way higher percentage than is humanly like reasonable to think of, right? And it really is that Hail Mary type of stuff. So the main difference between stages in stage 3 and stage 4 is the quality of setup. Stage 3, you are actually taking good setups, like we talked about. In order for you to get in that win streak, you must have done something right. Even if it's just 2 trades to back, you did something right. So stage 3, you actually took a good setup. It's just one that fails. Stage 4, right, is where you actually end up getting clapped on a very terrible setup, right? So for me, I cannot explain to you all how many times this has been the exact structure of the week that I have had as a trader, or the month that I have had, right? Or the year that I, whatever the case may be. I would say that my 3rd year of trading, because my first 2, I've been open about this, my first 2 were just L, right? My third year, I started to find, well, first like 18 months to second year was just LL. Then I started to find that little bit of consistency, but this is where I really struggled, right? Where I really struggled, and that's why it kind of shocks me that I haven't thought of this, the presenting it in this way before, is because this is where I really struggled, is that I would have these like stages. It's almost like the loop is something that happens to everybody, but especially hurts beginner traders. The spiral is something that really hurts traders who are so close to getting there, right? Like, you know how close you are to getting there and to being consistently profitable, but it's the spiral that continuously gets in your way of having any sort of consistency, right? And I would say that in between that like 21 to 24 months into that like beginning of my third year of trading, I would say that the spiral was something that was probably holding me back more than anything, right? Where I would have several consistent months of profit and then wipe them out in 1 or 2 bad Fridays, right? Something like that, which is ultimately one of the most frustrating, if not the most frustrating thing that can happen as a trader, right? So in the last presentation that I did, hold on, one more second, pause. So in the last presentation that I did on the loop, right, we ultimately came to that deathly cycle, that stage 5, right, where we talked about a variety of different solutions. We talked about how the power of detaching from the charts. We talked about the power of just being aware of the loop in general can help you. We talked about how having handwritten rules can help you and anchoring phrases. Then we talked about the power of an accountability partner. Then I additionally talked about like another 8 different trading psychology things. So again, please refer to that video if you have not watched it yet, as it will give you a ton of more overall trading psychology advice that can be applied to the spiral as well, right? But with that, with the spiral, there are 4 things that I'd like to mention that can help you solve and get out of the spiral once you are stuck in it, or ideally during stage 2, when you start to feel that volatility in your emotions coming up in the first place. Right. So first is, again, the power of awareness. I genuinely in my heart believe that just by being fully aware of the term, the spiral, and associating it with the 4 stages that we talked about, by being here and attentively listening or rewatching or whatever the case may be, but actually absorbing the information that I'm telling you right now, you have already made a step. And I've already made a step by presenting it this way and improving ourselves in our ability to how the spiral handles us, so to speak, right? Or how bad we let it get, right? Because it's going to happen to everybody. But the power of awareness is a very real thing. I cannot tell you how many messages I've received since doing that really in-depth loop presentation that I've gotten from people saying, Jake, I feel like I'm in the loop right now, so I'm going to take a step back. The power of awareness should not be underestimated. So by being here right now, attentively listening and actually paying attention to what I've been saying throughout the course of this time, not being on your phone, kind of half listening, kind of scrolling over, which I know I just caught a few of you doing, but actually attentively listening to this and digesting the information that I've told you, congratulations. I believe that is step 1 for the power of awareness in terms of limiting the damage the spiral can do. So as long as you are aware of all of the things that we just talked about, you actually just took a step towards improving your trading psychology. And it was probably one of the easiest steps. You just had to sit back and actually listen. It's almost like you had to just go to class, but instead of like some washed up old dude teacher, it was, just me. And, we had fun together this weekend. I'm definitely no teacher, right? But the second way is, again, not trying to reinvent the wheel here on this one, is decreased position sizes, right? So for me, the way that I'm going to start using this in a real life example of how I traded this last week was going into my performance on Wednesday versus my performance on Thursday, right? So on Wednesday, I had the largest trading day that I have personally ever had. It was on Snowflake. I made a crazy dollar value. It was just unreal, right? It was the hands down best trading day of my life. But here's the thing. I felt myself just a little bit in stage 2 of the spiral. My P&L swings were a little bit more volatile than normal, right? I did start to feel this certain sense of it's just my profit on an intraday level, but I felt that way. I felt myself starting to go into the loop a little, or into the spiral a little bit more in that stage 2 area. And it's no surprise, right? I had my biggest day ever, but I also definitely put on a little bit more risk than I normally do, right? Not a lot. I happened to catch an amazing trade, but I definitely was putting on a little bit more risk, right? So all of a sudden, my emotions started to become a little bit unstable, right? I know it sounds like, oh, Jake, people have told me this a million times before. It's not new information. Yeah, well, this is literally what I did on Wednesday and Thursday, and it made a huge difference for me. After having my largest day ever, I took a big withdrawal, and on the next day, even though, in my opinion, the snow setups that we saw the next day, which was on Thursday of last week, while it wasn't A++ because we didn't get the level test, I remember it all so well. We came up just short of the level. We had to buy before the level. Still sad about that. But because of that, I used a decreased position size because of the trade setup, but mainly because I was trying to manage myself knowing that I had just entered stage 2 of the spiral, right? I had started to feel these emotionally volatile swings. And what I didn't want to do was go from stage 2 to stage 3, where I have that big give back day. Right. Again, I know the numbers seem outrageous for you all, so we're going to scale them down for mine. But let's envision I had made $1,400 on Wednesday, right? If I all of a sudden start to give back 700 of those dollars, that's a large give back, right? And I really wanted to avoid that give back day, right? So for me, having a decreased position size after you start to notice yourself in stage 2 of the spiral is absolutely critical, right? Taking your position size down a notch is literally never a bad thing. Guess what's the worst thing that can happen, my friends? You miss one good trade that like without as much size on it as that you wanted. Cry me a motherfucking river. You know how many times I miss trade setups without getting as much size as I want to on them? You as well. I mean, after doing this for 6 years, this is the type of thing that happens on like a weekly or daily basis. You can't let that negatively affect you, right? If the worst thing that happens is that you missed as much size as you wanted on one particular setup, who the frick cares? Because guess what? Spoiler alert, that's probably going to happen again like next week. Right? You can't let that be something that's negative. So in my opinion, there really are no negatives of decreased position sizes. As long as you're still trading a position size that's actually like meaningful to you, you're not trading like, you don't go from trading 1K size to trading $50 position sizes, right? Like that wouldn't work in my opinion, but decreasing it by a notch or two will naturally help you control those unstable emotions, right? I started to feel a little bit like I was having those higher volatility of emotion swings. I was feeling the dopamine hits were a little bit higher. So to negate that, I reduced my position size, right? Now, next up on the solution is to have a clear structure of your risk multiple, right? So essentially you want to ask yourself the question, how much of the recent streak am I willing to risk? Where is my cutoff point on that? And how do I ensure that I actually follow that plan, right? So again, for me, for example, we're going to scale down my numbers, but rather than being up in, 228, whatever, we're going to say I was up $2,000 this last week, right? Let's say that I closed last week with a $2,000 profit, right? Coming into this week, and let's say, for example, that was my biggest week ever, right? Which at the time, I definitely had a $2,000 week. That was my biggest week of all time at one point, right? That felt amazing. Right. And I know some of you out there are like, damn, I can't even imagine $2,000 a week. Stick with it. You will. Right. But let's say you've made about $2,000 that week. The next thing that you need to do is start to ask yourself the question. And again, let's actually stop and make this a new slide. Right. On the clear structure of your R multiple, you want to ask yourself the question, okay, how much of that recent streak am I willing to risk? Right. So for me personally, and again, everybody's risk tolerance is going to be different because it matters how much of that 2,000, like how important is that $2,000 to you? Does that change your life forever? Does that like it all depends on your own personal risk appetite, right? But for me, what I like to do is set a risk parameters, right? So let's say I'm up $2,000 profit last week. Next week, risk structure. For me, one way that I would maybe do this is say, okay, trade one, risk $200, right? For me personally, I don't think that losing $200 of my previous profit, right, would actually be that detrimental to me as from an emotional perspective. If you think it would, you can decrease that. But again, the numbers are all arbitrary here. What matters is creating the structure, right? And I'll say, maybe one trade, risk $200, right? Overall, I'm going to put cutoff point. Call it $500 on this particular point, right? Again, these numbers are arbitrary. You can replace them with whatever your risk appetite is. But for me, this is something that I would personally feel comfortable with. If I made $2,000 in profit last week, right? One of the ways that I would structure my risk going forward is saying that, okay, on any individual given trade next week, I'm willing to risk about $100 to $200, right? $100 to $200. I'm going to give myself a cutoff point of 500, which means that if I lose $500 of the recent profit that I have had on a winning streak, I am on a cutoff day. That means I take at least the rest of the day, preferably the rest of the week, maybe even a few days after, where you give yourself a structure and cutoff point where you are done for a little while. The reason I do this is it puts in a barrier to stage 3 and 4. Right? Stage 3 of the loop is where you have that give back. Or stage 3 of the spiral is where you have that give back. Stage 4 is where you go all out degen and revenge trading. Right? So in order to prevent stage 4 from going on, you want to make sure that you have a definitive cutoff point at which you say, okay, at minus 500 of my recent $2,000 profit, I am done trading for at least the rest of the week. I need some time to take a step back. Why? Because I don't want to go in revenge trade and end up giving back all 1,500 that I made last week. That's the last thing in the world that you want to do, right? Now, the most important part about having a cutoff point is ensuring that you actually follow that cutoff point. I'm going to be completely honest with you all. I think the most effective way to do that is to have an accountability partner, and preferably to be a close friend or a spouse or like partner that you have, right? If you tell a close friend or a spouse or partner, hey, I closed last week up $2,000. My max risk this week, because I don't want to go on this tilt street where I give back a ton of my profits, et cetera, et cetera, et cetera. If I lose more than 500, I'm going to call it a week and I'm going to come back. That way I don't give back too much of those profits, right? Having an accountability partner there in terms of following that plan will definitely be very helpful, right? Now, last is withdrawals, my friends. Withdrawals. I will preach this till the day I die, right? Previous slide equals $500 cutoff point. How to ensure how do we ensure the $500 cutoff point? The first thing we just talked about was an accountability partner. There's no doubt that could be a great solution. However, the best way to ensure that you don't lose more than 500, withdraw the other 1,500, right? If you withdraw the other 1,500, then guess what? It's safe. It's in your bank. You'd have to wire it back in the same day in order to lose it, which, don't get me wrong, I think all of us have been in that position before where we pull an instant deposit out to try and average down, but it adds that extra layer in between, right? So if you're giving yourself this structure and this cutoff point, what's beyond that cutoff point, I recommend to withdraw. I recommend get it out of your account, because once it's out of your account, it is significantly safer than it ever was before. Right? So these are the 4 methods that I believe can help prevent you from going down the deadly vicious act that is the spiral, right? So the first thing, again, let's quickly review it, right? We have the spiral here, right? We have stage 1, where you have a series of winning trades. We've all been there, right? A series of winning trades. Some of you in your head might be thinking, Jake, if you always take this approach, won't you never scale your account? Won't you never take it? Blah, 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 blah. I get that. I'm talking about keeping your money safe. For those of you who are wondering, Jake, how do I scale all that? Blah, 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 blah. You've already somehow, it means you already figured out a way to get out of the spiral. The vast majority of traders out there never get past the spiral. This is where most traders who come close to being successful stop. And this is where they can never break through. This is where they hit that wall, right? You have a series of winning trades. You have a series of winning days. And eventually you go into the volatile stage where you start to put a little bit more risk on. You start to feel in heightened levels of emotional volatility during those trades. You start to feel anxious, high heart rate. It's just my profit, right? Stage 3 is where you have that one high quality trade setup that fails and leads you to a larger than anticipated loss. And stage 4 leads you into revenge trading, where all of the sudden giving back 40% of your profit turns into giving back your entire account before you can even say the words, I don't, next thing you know, boom, you're done. Right? So in order to combat that, there are these 4 main things that we have talked about, right? The first is the power of awareness. By being here, watching this webinar and attentively listening, I genuinely believe that you have put yourself in a better position to succeed by being aware of the spiral. Next up is decreased position size. And we talked about how I specifically use that as an example to keep my emotions in check, right? If I had used a bigger position size on Thursday with snow, guess what? I would have made more money. Who cares? That's part of trading. There's going to be more setups this week. I'll look to execute on those ones, right? Next is a clear structure of risk multiple. How much of my recent streak am I willing to risk? Where is my cutoff point? And how do I ensure that I actually follow that plan? And the fourth and final solution to the spiral, the one that I believe is hands down the most powerful, is withdrawals. If on the like we said on the previous slide, you've established that $500 cutoff point for you, then the best way to ensure you follow that cutoff point is to withdraw everything above that 500. Right? That way, at the very least, those profits are in your bank and are safe. Safe. Right? So with that, my friends, that webinar ran much longer than I initially anticipated. We are definitely not done because I would like to dive into the charts just a little bit. So for those of you who stuck with me, I believe that it was ultimately better for you. So let me stop share here. Let me go ahead and share screen on my Thinkorswim, and we're going to dive into the charts just a little bit because I want to lay out a little bit of structure of what I expect to happen for the overall market this week. And really, the entire point of this presentation, this part of the presentation, is just a warning. It's just a warning, right? I believe in my heart that the market has been a whole lot of fun the last week or two, right? We've had this sort of breakout for the past 3 weeks. We had several weeks of consolidation before we got essentially one and really just 2 weeks, right? We had one fun week there, and then we had another fun week here of clear, definitive trending action, right? I am of the mindset that I believe the market's fun is about to be put on hold. And here's the reason why. The market doesn't love to let people have fun for that long of a time. For those of you who have been in the Discord for a while, who have been part of the OGs, you'll remember that after we had this run here, as well as, it was actually this run here. After we had this run here in the market, I actually went on record and essentially said during a Sunday webinar, I think the market's about to get not so fun. After this run here, I said, I think the market's essentially about to get not so fun, right? Meaning, I think we may be entering a stage of consolidations in the overall market. I think we might be reaching a point with a little less volatility in terms of upside parabolicness and a little more consolidative range type behavior, right? Now, obviously, I don't know that for sure. Next week could be another trending week. We could trend to the upside. We could somehow trend to the downside. I don't know, but I have this gut feeling based on the chart. And here's the reason why. How many people you know make money in the markets regularly? Not very many. Even though it's just an unfortunate reality of trading, most people lose, right? The last several weeks, especially if you've been on Twitter or social media, it feels like a lot of people have been winning a lot. And that feels like it's almost that there's that cynical side of me that's just come on. What's the catch? You know what I mean? What's the catch? And for me, I think the catch is that the market is about to go into a period of where it's not so fun. So here's what I mean by that. We spent so much time at this area, and I don't use supply and demands, I don't use boxes, but I'm just thinking from a literal logical perspective. We spent so much time at this area, right? Logistically speaking, it would make sense if we come back and retest it with some sort of price action. Now, here's the thing. If we were to just go and retest this bitch, pardon my French, in a straight line, that'd be fine. We could just short it. Like, that's cool. I don't think that's the way it's going to go. Here's why. The market is currently in a daily uptrend. There are bulls who are buying, right? So I do think that the way that this is going to go is it's going to start to set a little bit of a pullback. I think that pullback's going to get a rally. I think that pullback's going to then fail that rally, right? And I think that is going to happen several times before we ultimately get back down to 4,200. Right now, this can all be invalidated by a break over Friday's high where we continue to trend to the upside. I would love that. And I would make a shit ton more money if that happened. But my hopefully not, but fearful, I think it may happen scenario is where we get a little bit of pullback that fails, right? Pullback that ultimately then tries to go down again. And we continuously kind of fail pullbacks and make it trappy action though. Right? Maybe this one rallies up and sweeps this high right here and then starts to fail. Right? I think there's a variety of different ways that this can go that would ultimately lead it to the same conclusion, a failure to go higher, that we ultimately come back to this 4,200 area. And I think that that could happen in a not so fun way. So here's the things that I am doing in order to make sure that I keep myself safe over the course of the next several weeks of trading. 1, fatty withdrawals. I know this may not be applicable for everybody, but for anybody who has profits over the course of the last several weeks, in my opinion, now is the time to withdraw them. Now is the time to get them out and keep them safe, right? Number 2, smaller size, but really smaller size or none on swing trades. I think swing trades are about to be a little bit more trappy over the course of the next several weeks. Again, I'm not entirely sure this is the way it plays out, but if we start to get this type of action, here's how I'm going to react to it, right? I'm going to be trading with smaller size, and really on swing trades, I'm going to be trading with smaller size or none at all, right? And finally, my next approach that I believe to this mixed SPY that I'm about to trade or about to focus on is if it's not an F yes, it's an F no. Again, I know this is one, I'm not reinventing the wheel here. This is stuff I have mentioned to you all before, but this is how I'm going to approach it to try and make sure that I keep myself safe during what I believe the choppy action is. I'm going to try and adopt even more than normal. If it's not a hell yes or F yes, it's an F no. Meaning that if it doesn't check every single box that I want it to check prior to me entering the trade, I'm just going to skip that trade. That might mean that in the coming weeks, on the days that I do trade, I'm more aggressive. Maybe rather than taking 2 to 3 trades, maybe I take 5 to 6 some days on the days where I am trading aggressively. What that also might mean is on the days where I'm trading less aggressively, that I just skip outright more as a whole, right? And I say, hey, I'm going to stick around for the first 2 hours of the day, but unless it gives me exactly what I want, I'm not going to stress over it, right? To me, these are the 3 things that I am going to do to try and combat what I believe is going to be an ultimately trappy chart for the foreseeable future, right? Now, with that, my friends, this actually ended up running towards the hour mark. I did not anticipate going this long. However, as always, I hope that I was able to deliver some insane value for you all. I hope you found this very helpful for your trading psychology. I hope that the spiral and how we start to manage that sticks with you all a little bit more. I hope that everything that we covered in today's webinar helps elevate your trading to the next level. Like I mentioned, the spiral is what I believe most traders hit their ceiling at, right? I believe most traders ultimately hit their ceiling because they are never able to get over the spiral-like actions where they give back all of their profits. So what I encourage you to do is once this recording is emailed to you or posted on YouTube, to make sure to rewatch it over and over again and take the actionable steps that we talked about to prevent yourself from going into that deathly spiral cycle. With that, my friends, I hope you enjoyed this webinar, and I cannot wait to see you in the next one. Talk soon, all right? Cheers, gang.